Good evening, and welcome to the Marine Minor Cook Afternoon. My name is Henrietta Toivonen, and I'm one of the Ath Fellows this year. Leadership is something that every single CMC student will hear a lot about during their time here. If each of us was asked to define the term, however, we would quite likely all have different answers. Despite these distinct notions of what leadership actually means, many, and I would say most, of us are interested in pursuing leadership positions in the future. Tonight, we will hear from a CMC alum about his personal story of leadership and receive advice on how to realize our own individual paths. Joseph Martinetto is the Senior Executive Vice President and Chief Financial Officer at the Charles Schwab Corporation. In this role, he is responsible for the core operations of financial planning and analysis, treasury, the controllership, investor relations, and many other key functions. Mr. Martinetto joined Schwab in 1997 as Senior Vice President and Treasurer and rose to become the company's Chief Financial Officer in 2007. Prior to joining the company, he worked in a wide range of areas in the financial services industry. He is an alum of the class of 1984 of CMC, with a major in mathematics and economics. He also holds an MBA from the University of California, Berkeley. Mr. Martinetto is a guest of the RDS Distinguished Speaker Series. And as always, I must remind you that audio and visual recording is strictly prohibited. Please join me in welcoming Mr. Martinetto to the afternoon.
Thank you. The stage is set up a little differently. I'm used to being able to wander, but I'm going to try not to get in front of all the slides here in the glare of the projector. You know, I hadn't even made the connection about how much you probably all hear about leadership. My daughter actually came down for a college tour, and she came back and said, well, what do you think about this school? She said, blah, 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 leadership. It's all leadership. So I think you're making the point here. But trying to see if we can make this jump in. So why am I here? Henrietta did a great job of introduction. I am a CMC alum. I am the Chief Financial Officer of the Charles Schwab Corporation. I think maybe that was an older bio. As of a couple of years ago, I picked up some additional responsibilities. So at this point, I really kind of run all the back and middle office functions for Charles Schwab. So I've got the technology operations, the operations group, the bank function, as well as the finance piece. So really pretty much everything that's kind of in the back office, keeping the lights on, keeping the company running realm at this point. As Henrietta also alluded to, leadership's going to mean a lot of different things for a lot of different people. And so over the course of your time here, I'm sure you'll hear a lot of folks talk about what does leadership mean, how have they applied it in their role. I hope through the course of spending a little bit of time talking about what I've experienced over the course of my career, maybe you'll glean a couple of nuggets here that you're going to be able to apply in your own world as well. But I would also encourage you just keep thinking about what it means to you, because it is going to mean something very different to everybody in the room as they start to have their own success in their careers. So starting out, I probably got to Claremont in a way that was a little different than I would imagine most of you. Although I did, in the intro session, I was surprised to hear how many people still managed to just kind of drive their way to college here. I grew up down the road in Alhambra, so I was a local Southern California person. I think my experience of college tours was probably a whole lot different than most of yours. My college tours consisted of the schools that I could drive myself to. I made my own appointments. I drove around. I went to a few different schools. I chose Claremont. My family, I was the first generation to go to college. Neither of my parents were actually college grads, so while they were incredibly supportive and they saw the value of a college education, I wouldn't say that I had a great set of guidance at home around what would you do in college, what would you really study, how would you really apply this. So a lot of it was very different for me as I was finding my way through Claremont as a whole. I would also say that times were still a fair amount different. We didn't have really well-developed internship programs. It's incredibly impressive when I talk to all of you about the things that you're doing in your summers and the companies you're working for and the opportunities you're able to avail yourself of. I spent my summers working in a sheet metal shop to make enough money to be able to come back to school. So times were a little bit different as I worked my way through Claremont. But the point I guess I would make here is it really doesn't matter where you're coming from. What really is important is the collective experiences that you're gathering, the knowledge that you're building as part of your education experience here, and how you're going to deploy that as you move forward. I'd also say that for those of you who are sitting here not quite sure about exactly where you're going to go, it's okay. You have time. You can figure this out over the next few years. You don't have to have that perfect job in mind and be ready to just jump right into whatever it is that you've set your mind on and follow that path perfectly up. You've got time to figure this out, and the odds are good in the first couple of jobs you take. You're going to learn a lot about what it is you actually enjoy, and you're probably going to be making some course corrections along the road. So while I was at Claremont, I was a mathematics and economics major. I told the story earlier. I was actually more focused on the mathematics part. Math majors at that time, this was the Reagan era, the defense buildup was big, so math majors went to work in the defense industry. I didn't find that I actually wanted to work in the defense industry, so as a result, I filled in my econ major and I ended up going to work in a bank because banks had large recruiting programs and trading organizations back then. So a lot of folks went to work at banks for a couple of years. That's what I ended up doing. I figured out really fast that there were a couple of critical gaps. So as opposed to, I think the depth of classwork that you guys are able to get here these days, I think there was one finance class that was offered when I was here. It was corporate finance. I didn't actually take it. I took one accounting class because you had to as an econ major to graduate, and that was it for all I took for accounting. So I found out pretty quickly once I started working that I knew neither the language of business, so I didn't know enough about accounting to be dangerous, and I really didn't have applied skill set for all that math and economics. So I went back to school and picked up an MBA from UC Berkeley, and I took pretty much every finance and accounting class I could take in 2 years. Now, the good news was I was able to waive out of a whole bunch of GE classes for my MBA because I'd taken all that stuff here. And I could really focus on getting the depth of education in both finance and accounting. Accounting so that nobody could ever pull the wool over my eyes in terms of how something was recorded or booked or described in an accounting statement. Finance because it was a really interesting meshing of the things that I enjoyed of economics and mathematics. It was a great application set. So again, here, this is one of those things where I would encourage all of you, if you get the opportunity, make the investments in yourself. It doesn't necessarily have to be a formal education program after Claremont, but if you get a chance to pick up either seminars or night programs or executive programs or whatever it is, if you identify something that you don't feel that you've got a great control over, fill the gap. Make sure that you're picking up the experiences and make sure that you're filling those holes so that when those opportunities come up, you're ready to step into them. So I was in business school in the fall of 1987 as a second-year MBA student. Most of you are probably not old enough to remember what was called Black Monday. It was October 19th, 1987. The Dow had its single largest at the time decline for a single day. It fell over 500 points, which was almost 23% in one day. What do you think happens to the job postings in the Career Center when that happens for companies that are in financial services? They get ripped up. You could literally go down to the Career Center and find applications that were, career postings that were laying on the floor of the center, largely because everybody was trying to reassess exactly the damage that this was going to do. This was sort of unparalleled. The challenge here was, what do you do? Well, I'd maintained some good relationships, so I ended up going back to First Interstate. And at the time, as crazy as this sounds, First Interstate was actually a company that was having some challenges financially. It had gone through probably an ill-advised attempt to purchase Bank of America. It failed in that attempt. After that, it went and bought a bank in Texas. The Texas bank was a black hole of credit losses. And as a result of that, the company was facing some real financial challenges. That was probably the best thing that ever happened to me. Now, that probably sounds a little nuts, but when you stop and think about what happens at a company that's in trouble, if you're paying attention, you get an opportunity to learn an awful lot. So what happens when you're rolling $9 billion of commercial paper and you suddenly get downgraded in 1 week from A1P1 to A2P2, and all of a sudden the money funds that were buying your paper can't buy it anymore? I had the answer to that because I lived through it. What happens when you've built a hedging book that is credit sensitive and you get downgraded from A+ to BBB in about 3 months? The book blows up. I can tell you how to work your way through it because, again, I had the opportunity to actually work my way through it. The surprising thing about companies that have a little bit of challenge, and I'm not necessarily recommending you all pursue this path, but if you find yourself in this opportunity, if you are willing to work hard and you've got a good set of skills, you may get the chance to go do some things that you wouldn't have done had you not been in this situation, because a well-performing company probably has a really well-developed succession plan and great opportunities to recruit. Companies that are struggling a little bit will take a chance on people that maybe aren't quite as proven. So I got the opportunities to do some things very early in my career that I don't think most people would probably get to do. I was able to pick up experience in cash management, portfolio management, hedging routines, asset and liability management, capital planning, capital financing, funding. I ran a whole bunch of functions in relatively short order and in pretty quick succession. And those were really some of the formative experiences of my career, the building blocks that prepared me to be able to do some of the things that I did later on in my career. I worked probably 2 jobs most of the time I was doing this, now 1 employer, but most of the time through here I was actually running the long-term funding desk and working on the West Coast. The long-term funding desk opened at 4:30 in the morning. So I was at my desk at 4:30 in the morning. I was at my desk at 6 o'clock at night. I closed that desk up at about 1, and then I'd start working on something else. So it wasn't without a fair amount of hard effort, but it also paid off in terms of experience. The other thing I would stress for you here is, even if you don't find yourself in a company that's got some challenges, if you get the opportunity to take risks, take them early in your career. 1, they're great learning opportunities. 2, what you'll find is as you advance in your career, the risks get bigger, and the companies aren't going to be as willing to let you take the risk, and they probably shouldn't. But when you're still early in your career, you will get chances. You should jump at them, because that's how you're going to build that portfolio of skills that's going to allow you to be successful. Now, I should put a warning on that. I don't want all of you walking out of the room and saying, the CFO of Charles Schwab told me I should take this job even if I'm not qualified to do it. No, if you're not qualified to do it, don't take the job. If you think you can stretch yourself into it, if you can take a class and learn about it, if you can learn from the people that are already doing the function, you can find yourself a mentor or someone who will help explain it to you, and you can get there with a little extra effort, those are the kinds of risks you ought to be taking. If you're clearly not qualified, don't jump in. It's probably not going to work out really well. So here it was. I was doing all kinds of different things. I got some great experience. I was relatively young still in my career. We'd had some financial problems as a result of the credit challenges, and so the company was looking to rationalize expenses and was trying to find some savings. So we were consolidating a lot of the functions in the back office, and I got tapped to run the Consolidated Asset and Liability Management Program. I was 32 years old. I'd never worked in asset and liability management. We had scores of people, literally dozens of them across the organization in the various regions that were doing this work. They had advanced degrees that were higher than mine. They had years of experience that were longer than mine. They had direct experience with the function that far outstripped mine. I asked the guy who gave me the job at one point, and this is after I'd been in the job for a while and had become friends with this person who ultimately became an important mentor to me in my career. why I was chosen for the job. And I was really expecting to hear something about, Joe, you were just so smart, we couldn't possibly pass you up for the role. What he actually told me was, you were the only person that all of the people across all of the regions agreed they could work with. That's one of those silly things, and to think that that was so instrumental in what became a really important job in my career, I never would have even thought that was the reason. And point blank, that was really it. Bottom line is, when you get into industry, there will be plenty of people who aren't really nice people. Don't be one of them. Treat people with respect. It costs you nothing. It is a small world. You never know who you're going to be working for next or who's going to be working for you. So treat people the way you want to be treated. I will tell you, this has come back several times over the course of my career where people will just say, we like to work with you. You seem like a good person. It creates opportunities that you will never imagine. You do not have to be one of those people who is not nice to others to get ahead. You will see examples of them. There are plenty of them, but you do not have to behave that way. So, okay, I'm 32 years old. I'm running an asset and liability management function, which is basically all of the decisioning over how do you run your balance sheet and how do you price your products. And I've got this group of people who I've picked from across the regions to consolidate onto this team, and now they want to know what it is they should do. That was a big step. This is the first time I would say I really felt the authority of leadership or the responsibility of leadership, and it was a challenge. But I will tell you a couple of things that proved to be really important learnings for me at this point in time. The first is the people on the team, they need a leader, and they need you to act like one. So if you're put in that position, you need to do it. So that doesn't mean that you have to know everything. It's okay to ask other people their opinions. It's okay to say we need to do a little bit more research. But at the end of the day, it's disrespectful to the people that are reporting to you if you are put in a position of authority over them and you don't behave as if you own that responsibility. So what do I mean by that? You need to set agendas. You need to hand out assignments. You need to hold people accountable for getting their work done, right? Act like you belong in the role. This is really simple stuff, but I can't tell you how many times I have seen people over the course of the years who step up from deep technical expertise into a role of management, and they fail at it because of exactly this reason. They don't make that transition from the thing that got them there, that deep knowledge base, into the thing that will make them successful as a leader of an organization. So just keep in mind when you find yourself in that position for the first time, and as smart as all of you are, you'll probably find yourself in a position that's not too dissimilar to this. You'll be a young leader. You'll have people that are older and more experienced and more credentialed working for you. You need to act like a leader. So it all sounds really good, right? I'm 32 years old. I'm running this big function. I built this network. I've got all the support of management. Everything's going great. And I get a call on a Sunday afternoon saying, we're going to LA tomorrow. Wells Fargo has made an offer for our company. Not only have they made an offer, they've made an unsolicited offer. So acquisitions are messy enough. Hostile acquisitions are even messier. And we were unsuccessful at the defense. We ended up selling the company after a couple of other bidding machinations to Wells Fargo. It became acrimonious enough over the course of the negotiations that by the time the deal was done, Wells Fargo made clear that anybody who was not affiliated with the deal on their side was probably not going to be staying with the company. And I found myself out of a job. So that's this stuff happens. It happens to the best of us. What you ought to be aware of out of all of this is careers are not linear. And while mine had gone in a single direction up to a point, I'd hit that first big stopping point where I was going to have to make changes. And I will guarantee it's going to happen to all of you. I can't think of a person, and I'm sure somebody in here is smarter than me and will be able to come up with the example of someone who went to work in a junior level job and set their eye on the job at the top and walked all the way up those stair steps up to that top job without any interruptions That is incredibly rare. Job markets are incredibly imperfect. And you start thinking about just what happens in the progress of trying to find jobs. So huge information asymmetries, right? What you know about yourself and your skills is very hard to transmit in that hour interview that you're going to have with a company. Likewise, it's really hard for the employer to transmit what it is they're really looking for. There are huge transaction costs. So for those of you that study markets, what happens when you get big transaction costs in markets? Markets become imperfect because the costs of switching and changing companies and moving your families, all of those things, they create disruptions in the marketplace. So you will find it incredibly frustrating at points in time. You will be ready for a promotion. It's so obvious you should have one. The company won't have one to offer you. You may have to take a lateral move to pick up some additional skills. You may have to change companies. You may have to do all kinds of different things. But the one thing I would tell you is it's great to have goals, but through the course of your career, cut yourself a little slack because sometimes you're going to need it. If you can see your way forward and you're still on a path, that's good enough. You don't have to have every move be perfect. And if you're planning for that, you need to start thinking that that's probably not a great plan. So I've always been a little bit motivated by fear. I will admit, I'm a product of my upbringing. I didn't grow up with a lot of affluence. My father made clear that when I was through school, I was my own responsibility. I worried about being able to pay my mortgage and support my family and feed my kids and all of those things. So the disruption for me was a pretty big deal. One of my colleagues at the time gave me probably some of the best advice I've ever gotten when I found myself in this position. And he said, you need to sit down and you need to figure out what are your real priorities and what are the things you're willing to compromise on as a result to achieve those priorities. And I'm sure many of you have been told that you can have it all. The fact of the matter is, you probably really can't. And so probably the one example I face constantly right now in my role, we are moving a big chunk of our organization out of San Francisco. San Francisco is not a very business-friendly place anymore, and it is a very expensive place to try to recruit talent. We can find great talent in other places where it's a lot easier to move folks and it's a lot cheaper for them to live. So our dollar of compensation goes a whole lot further. So we've been moving functions out of San Francisco really for the last decade, and we're kind of down to the last set of moves now. We have lost some incredibly talented people that I would have loved to have had with the company because they were not willing to relocate out of San Francisco. But for the folks that understand that, and they understand that the trade-off is, I'm going to go find another company, I'm going to go do a different job because living in San Francisco is more important than this job, that's the right choice. And they have to be able to accept all of the implications of that, right? The wrong choice is, I'm not willing to take the transfer, but I'm really resentful of that person who just got a promotion because they took the transfer and they're moving up faster than I'm moving up, even though I think I'm more talented. I'm sorry, folks, in the real world, it doesn't always work that way. If you want the promotion, you may have to be willing to move, or you may have to just be willing to live with the fact that you're not going to get it. But you can't be resentful of what you give up as a result of the compromises that you end up having to make. You need to really understand what's important to you and stay true to that as you navigate your way through your career. Likewise, if you make a mistake, you got to act to fix it. So I hadn't been in the job market for a decade when we ended up getting bought, and I thought I had done all the right stuff. I read up on the company, I met the people, I understood the function, and I ended up moving to a company that, so it was Transamerica. It was predominantly an insurance company, but it had some finance services businesses as well. I took a job that was very comparable to the one I had at First Interstate in terms of responsibility and title and compensation. What I didn't understand from the outside was that it was a very different organization than the one that I had left. And whereas I would have said First Interstate was a pretty collaborative organization where good ideas and smart people could get a hearing, life insurance companies back then, and maybe still to a certain degree today, tended to be run by actuaries. Actuaries make a lot of the decisions that impact how profitability is recorded at an insurance company. They have a lot of authority and responsibility. They resented very much all the stuff I was trying to do in asset and liability management. I had the sponsorship of the CFO. He was a great guy. He was absolutely trying to bring people in and change that culture, but the culture was too strong and he wasn't going to be successful at it. And ultimately, I ended up leaving the company, and about a year later, the company got sold. But it was just something that was really hard to assess from the outside. But once I got in, I figured out pretty quickly I hadn't gotten it right, and I needed to do something about it. So what ended up happening as First Interstate got bought, it looked like a terrible thing when all those people were thrown out of their jobs. It ended up probably being the best thing that happened to almost all of us. All of those people and all of those parts of the company had gone out and done pretty much the same thing that I had done. They went out, they found jobs, they were getting embedded. A lot of those people got promotions. So people that were my peers in the organization were stepping into treasurer jobs and CFO jobs. We even had a couple of CEOs that got launched out of that organization. Those people would have never been on that path had they stayed at First Interstate. So in many respects, Wells Fargo did us all a huge favor. And one of those people was the same one who gave me that job, ultimately landed as the chief financial officer at Charles Schwab. We went to dinner one night, and I was telling him about some of the challenges I was having. He said, "Gee, I need a treasurer. Would you think about coming down the street?" And then, next thing you know, I was down the street at Schwab. So I landed at Schwab in late 1997. It was a very unusual place, very different than anything I had experienced. Coming out of more traditional kinds of banking and insurance companies and landing in what then was a company at sort of the forefront of the internet revolution. This was a company that was growing extraordinarily fast. It was doubling about every 3 years. When a company doubles in size, it outstrips most of its infrastructure. And this company was outstripping its infrastructure about every 3 years. On top of that, it was still generating the majority of its revenues out of trading commissions. And we had no control over how often our clients traded. So we would have a great week, we would have a bad week. Sometimes it would add up to great quarters, sometimes it wouldn't add up to great quarters. The trajectory was going up, but it was a very wild ride. And so what was going on was in the financial practices, we had a lot of start-stop activity that was really disruptive in terms of how we were investing our dollars, in terms of products and services we were building for our clients, and we ended up throwing a lot of stuff out, and it was really a crazy time. The control infrastructure was also really weak. It operated like a very small broker-dealer as opposed to the very large company it was in the process of becoming. So all in all, it looked like a place with a whole bunch of challenges that were pretty interesting and things that I could dig in on. So this one I actually thought was kind of the right place. But the most interesting part of landing at Schwab was not so much what was going on with the business operations. It was this strange thing in the culture where everyone at the company, and I mean everyone at the company, talked about serving clients. And I'd been at companies that had talked about serving clients. You know, every financial services company talks about serving clients. But at the end of the day, most of them really don't do a very good job of it because it's not really what they focus on doing. Schwab focused on doing it in a way that was almost maniacal. And it was, you know, an example. I'd been on the job literally a month, and the person who ran our cashiering operations was looking at changing our check disbursement process and going to some different banks. And he'd gone through this whole request for proposal, RFP process, and vetted all these banks and collected all this information. And it was a massive set of data that he had to process because we were looking at all the endpoints of the disbursements and trying to figure out, you know, which ones were going to have impacts on how fast checks cleared for our clients. And You basically make money in disbursements in a couple of different ways. Or the impacts of financials are a couple of different ways. One is, what are you going to pay the banks for all the work they're going to do on the processing of all those checks? One of them is, how much float do you end up retaining? So how much of your client's money do you get to keep and earn revenue on while the checks are in the process of clearing? And so the proposal that they came in with was actually the second best one rather than the first best one. And the fees were pretty common or consistent, but the difference was, in that first best one, the float was about a half a day longer. And I looked at it and said, well, this one looks better. Yeah, but the float's longer. So it's only about a half a day. Nobody's going to really notice. And this person, who was really pretty junior in the organization, took me to task and said, look, that's not how we do business. We don't make money like that on the backs of our clients. We want to make it easy for them to get their money out, because at the end of the day, if we make it easy for them to take their money out, when they have more, they'll bring it back. That was a really interesting thing to hear from someone, right? That's not the way most organizations ran. And I found that it was pervasive, and it was part of how the company ran, and you can see it still to this day in a lot of the decisions we make. We will build things, we will launch things. They may not all be to our immediate economic benefit, but they have a common thread. They're all about serving clients better. And so that's a huge differentiator, at least for Schwab. I would say Chuck figured out pretty early what a lot of research has proven after the fact. So today we do what we call an engagement survey. It's actually sponsored by the Gallup people. So we send it out to all of our employees, and we ask them the same 12 questions, and we measure their degree of engagement with the firm. And we used to do a employee satisfaction survey, but you can imagine what kind of answers you get if you ask people questions like, are you satisfied with your pay package? Right? And no one's ever satisfied with their pay package. So some of those questions we just decided to throw away. We already knew the answers to them. But the engagement work is trying to get at this concept of, have your people bought into the purpose of the company, and do they feel that they are empowered to help deliver it every day? And it was a really natural thing for our company, because it's kind of the basis of how we run the place. But at the end of the day, what I think is probably the most important part of all of this is, when you think about what makes a leader is about having somebody follow you. It's not about ordering them around or forcing them to do things. It's about being able to convey to someone the vision of where it is you want to go, and having them say, I want to go along with you. And this is something that a lot of people and a lot of firms never really completely get. But you will find that the best leaders get this to their core, right? To get somebody to want to follow you, you have to engage with their hearts as well as their heads. You have to create that thing out there that they want to be a part of. And that's a very different thing than managing. Managing can be done in a very just sort of cold and straightforward way. You can't be a great leader if you don't engage with your subject at an emotional level. You can't engage with a subject at an emotional level if you don't buy it yourself. Your team, your company, the people that you'll deal with will see right through it if it's superficial. You have to believe it and buy in yourself. That's the only way you are able to convey the passion that's required to have people want to come along with you. If there's one secret in all of leadership that I've learned out of all of this, if you take one thing away from this presentation, that's it. You have to be engaged. You have to have skin in the game. You have to be a part of it. And this is probably my biggest challenge for all of you. So as I was putting these slides together, I noted a shift as I was starting to think about what I was going to say. And I don't know if you noticed it, but as I was working through the early parts of my career, I was talking about the jobs I had, the functions I ran, those kinds of things. I've been standing up here talking about Schwab now for probably half the presentation. I haven't talked about one thing about what I do there. I talk about what we do and how we do it and why we do it, because I am completely bought into it. And that to me is the most important part of working at Schwab. Now, you can argue I've risen to a place in the organization where maybe I don't care about titles and I make a lot of money, so money's not as important to me. But at the end of the day, I will challenge you to find that thing or those things in the course of your career that you feel this way about. You will have so much more success in your career if you can find them. It sounds trite, and we were talking about it at our table here over dinner. You get one shot at this, folks. You're going to live one life. You have to think about what you want to live your life for. I could have left Schwab and made a lot more money than I make. It's not the highest paying company. But I wouldn't have been aligned with what I feel so passionate about, which is our purpose. We are there to help people achieve their financial goals. We don't exist. The rest of the industry gets a whole lot worse because we hold them accountable and force them to operate in a way that makes them compete with us. We think we're doing the right thing in financial services. That's a big deal, and that's a big part of what inspires me to get up every morning and go to work and why I'm still so excited and passionate about it. I hope you all find that, because not only will it make your life a whole lot more enjoyable, it will also make the course of leadership a whole lot easier for you. So some of the takeaways out of the presentation. First thing, if you want to be a leader, you need to learn the business. You need to learn what the company does. You need to learn it at a level of detail that allows you to actually exhibit a mastery of it, so that when people ask you questions that are working for you, you can actually give them answers that make sense. This sounds obvious. Trust me, you will have managers that haven't done this. You will not have respect for them. You will not want to follow them. So I hope you don't have a lot of those. Treat people with respect, right? I mean, this is the easiest thing to do. It doesn't cost you anything. It will pay back so many times over the course of your career. You've got to learn to engage people's hearts as well as their heads. On top of that, you have to be true to yourself. Know what you stand for, know why you're doing it. And finally, when you get a chance to step into that position of leadership, do it. Act like a leader. Exercise the right principles. Stand up for the right things. Give your people the right direction. Reward them appropriately. So they will respect you more for it, regardless of how you came to be in the position of leadership with them. So that was it for prepared remarks. I would be happy to take any questions that folks have. Go back over here.
We now have time for questions. If you have a question, please raise your hand and wait for Henrietta or I to come to you with a microphone. As always, priority will go to students.
Hi, I've got a question. So you talk a lot about sort of trade-offs and prioritizing your life, but at the same time, you seem like a very busy man. Is it possible in someone in your position to like prioritize family?
It's possible, and it's imperative for most of the folks I work with. It's not always easy, right? You prioritize your family in different ways, and they're very personal decisions. So I have been fortunate enough that my wife chose to stay home with the kids. That took a fair amount of the burden off of me with respect to those responsibilities. And it's how we chose to divide our house up. It sounds somewhat antiquated. It works for us. We have made some big changes, some that have impacted the kids, and those things have to be factored in. So we laughed that we lived in Los Angeles, we had our first kid. We lived in Phoenix, we had our second kid. We moved to San Francisco, we had our third kid. We stopped moving. But there are choices and trade-offs that you will end up making. To pursue the things that I wanted to pursue, to have the career I wanted to have, to be able to make the money I wanted to be able to make, to be able to provide for my kids the way I wanted to be able to provide. We ended up in San Francisco. That implied a whole different set of trade-offs. The commutes were fairly long. I didn't make it to a lot of the kids' school events. I made it to a lot of things on the weekends. I made it to a lot of things on nights. That was a trade-off that we chose and acknowledged because we wanted to be with the family more in a suburban location than in a city location. And those are the kinds of things you have to have, the discussions you have to have. Yes, it is absolutely possible to fit your family in, but probably the most important thing is you have to be able to have a fair conversation with your spouse about what that means and how you're going to do it and the trade-offs that are going to be made and what that implies. It hasn't always been entirely comfortable, to be completely honest, but on the flip side, I just celebrated my 28th wedding anniversary a couple of weeks ago. So it can be done. It might not be the classic model that everybody else would look at and say it's perfect for them, but as long as it works for you, it's okay, right? I mean, I'm rambling on here. My daughter wanted to go to high school in Monterey. Right now, my wife and daughter are living in Monterey, and I'm working in the city and commuting on the weekends. Funny thing is, I probably talk to my wife more now than I ever did because we actually set up Skype and we sit and we talk. When you're at home, you don't actually have that luxury. So, I mean, you'll find ways to make it fit if that's what's important to you, but you got to make it a priority if that's what you want. Sure.
Thank you for your talk. It was incredibly inspiring. So you talk about a lot about leadership, and early in your career you got to take risks, and a lot about leadership isn't necessarily managerial, and not a lot about the hard skills, and more a lot about inspiring to use your heart as well as your mind. So if you're early in your career and you don't have a leadership position, so to speak, in your company, how do you show that you have that leadership in you without sounding bossy or trying to sound like you're better than another one of your employees or another one of your colleagues?
Right, so it's a question that everyone will grapple with. I chose a path that was comfortable for me. I didn't probably even realize I was doing it at the time I was doing it, but I tend to like to see whole systems at once. I tend to like to participate in bigger problems and problem solving. I have a strong skill set around breaking down really complex things and making them understandable so that you can deal with the pieces and get to the right answer. That meant in the places where I was able to exhibit leadership early on was as a member of a team. So you're a single person. You don't necessarily stand up and say, I'm taking over leadership of this team. What you're doing is contributing in a way that people feel like it's at or above the level that they were expecting from you. When you get a chance to contribute and say, I've got a different idea of how we might do that, exhibit your courage, exhibit your knowledge, people will start to notice and start to give you more opportunity to do that. At least that's how it worked for me. So for me, it was a more organic process of putting myself in positions where I could demonstrate it. Other people are going to have different skills and want to go at it in a different way. So there's not one right answer to it, but I do think that you're looking for ways to demonstrate your skills as you're moving forward in your career.
Hi, sir. Thanks for coming tonight. I was just wondering if you ever had an ethical question in your career, or maybe you worked for a boss who was doing something shady, or really if there was any part of your career where you had a major ethical dilemma and just how you thought through that.
Yeah, I have been incredibly fortunate to work for people that valued a high ethical standard, and some of that is, I think you find people that think like you do and try to attach yourself to them. So I can't say that I have ever had a place where I've had people ask me to cross lines that I wasn't comfortable crossing. There will always be examples where it's a challenge to stand up and do the right thing. I mean, probably I joke with my predecessor that some of you may have known his son Chris Dodds. Both his boys ended up going to school here. Um, he says, you know, there's always that one day where everything that you've ever learned or ever known comes to bear, and you have to exhibit all of your experience in that single day. I can remember in the middle of the financial crisis that day exactly, and we had a short duration bond fund that had invested in a lot of low quality paper, and the market had gone completely illiquid. The clients had started to redeem some of the fund. Every time they redeemed, we had to sell bonds to produce liquidity. Every time we sold bonds, prices fell because there was just basically no market. And so the fund went into a death spiral. And every day it would go further down. Every day we would get more redemption requests. The next day it would go further down. And I can remember sitting in a conference room with Chuck Schwab and having to tell him that we didn't have enough money at the corporate level to stand in front of the failure of that fund. That was probably the single hardest day of my career, because this was a man who was really a paragon of the industry, who I had immense respect for, whose name was on this fund, whose name is on the company, and to have to tell him that we have to let this fund go and those clients are going to suffer as a result of it to save the rest of the company. That was not an easy conversation. I don't know if it's an ethical dilemma, but it was certainly something that stuck in my memory as something I hope I never have to repeat. So yeah, I mean, you'll as you move up, as I said, the risks get bigger. You will find yourself in places where you'll have some hard conversations that you wish you never had to have, but you have to have the courage to have them because you have to keep moving forward. And your ethics, to the point, your ethics can never be for sale because you can never recover them, right? That is the one thing that is yours and yours alone, and if you lose it, it's gone.
Hi, thank you for your talk tonight. So I was wondering if you became passionate about leadership at a specific point in your life, or if it was just a more gradual development with you, and if you did become passionate specifically, did you start reading books, or what you did to continue the growth of your leadership abilities in your personal life as well and not just in business?
Yeah. So I guess there's two different threads there. So one is, it kind of grew on me organically. I think I made my way through the ranks for a long time as a very effective manager. I don't think I really completely understood what leadership meant for a lot longer. And just that concept of needing to get people to want to follow you and being able to engage them in a way that they do it voluntarily, that took a long time for me to settle on. And I think some of it was I probably didn't even completely get it until I got into the CFO role, because there was no choice once I got there. You were forced to be able to do it. There are certain things that you have to do, I think, when you start taking some of these jobs. I was a terrible public speaker. I learned how to be reasonably effective at it. I wasn't a great leader. I learned how to do it. It actually became something that I became much more passionate about as I figured out how powerful it was. But it's one of those things that you have to do and see and begin to understand that it does actually lead to outcomes that you can't really achieve any other way. And then you want to do it more because it's producing the results. The other piece was the integration with your personal life and your business life. This whole work-life balance thing, I will admit, I don't understand it, right? There's one life, you live one life. So while I'm at work, I'm still texting with my kids when I get a few minutes to check up on what's going on with their test. When I'm home, if I get an email, I'm responding to it because it's probably something pretty urgent that came in late at night. So I'm not a different person at home than I am at work. I'm Joe always. I don't know how people operate in different modes. It seems really complex to me. I'm far too simple for that. It's just, it's the skills that you build, they definitely carry over, but I wouldn't say that it, for me is a dichotomy between personal life and professional life. It's just who I am.
Good evening. Thank you, firstly, for coming to speak with us this evening. Throughout the course of your talk, one of the things that was sort of really recurring was the importance of firm culture and making sure that what you were looking out of sort of employment and experience was in line with this type of culture you were joining. You also mentioned sort of the heavy information asymmetries that result from sort of the employment process. And so my question is, what are the best ways or best signals to look for to identify key aspects of firm culture to help you sort of align and sort of find that best fit for you?
Yeah, so you're all fortunate that there's so much social media out there now. It's a tool that was not readily available as I was coming up the ranks of a lot of these companies. Probably the biggest mistake I made when I made that move to Transamerica was I wasn't allowed to talk to all of the key players. The CFO very cleverly segmented me off into the camp of the new people that he had recruited who were aligned with him, and kept me away from the camp of the people that were not as aligned with him. And I didn't know enough to know that I needed to go that direction to see those people until I got inside the company. And I don't know how you figure some of that out from outside. So if you have friends that work there, talk to them. Make sure you're meeting with the right people. These days, there's a lot of tools from Glassdoor and everything else. Go read up on what people are saying about what it's like to work in these places, what type of experience they're having, how they treat their employees. See if it seems like the kind of place you want to be. I think you can minimize the odds some. I don't think you're going to completely eliminate the risk of you didn't get it right. But again, this is no decision you're going to make in your career is unrecoverable, right? If you don't get it right, you can always change. And I would encourage you to do it. Not necessarily like within a month or two. Give it a little time to make sure you really got the lay of the land. But if it's not right, move on.
Hi, thank you for speaking. Your classmate alluded to how passionate and brilliant you are, and I can say I agree. My question revolves around 2007, and I know that you had just come into a leadership role, and it might be kind of traumatic to speak about, but I wanted to talk about crisis leadership and morale and how you get that to both the tactical and the operational and the strategic level in such a trying time in the financial services industry that may or may not repeat itself while we're in power.
Yeah, so we were incredibly fortunate that we had all of the right underpinnings coming into the financial crisis. And by that I mean we were a purpose-driven organization, so people understood why we were there. They also understood that for us to continue to be there, that meant that we couldn't take the kinds of risks that would blow the company up. So a lot of the things that got so many people in trouble in the financial crisis, we just didn't do, because we thought the risk-reward trade-off was not in line, and if we ended up blowing ourselves up, we wouldn't be there to serve our purpose. So we just took a whole swath of things and just didn't do them. The other thing that we have always, I think, been known for is we are a transparent company. We tell the truth, we make commitments, we honor them, or we fess up that we didn't do it. And if you read our financial disclosures, if you listen to us talk about the company, we're pretty straightforward, we're pretty open, we're pretty candid. It's a pretty understandable business model. We strive really hard to eliminate complexity so it stays that way, because it produces real benefits in terms of communicating what we do, why we do it, how we do it. And so again, I think we had a good set of processes for how we communicate with our employees about what's going on. And we had built credibility over a series of years by being transparent with them about the things that were going on in the industry or the company. We actually had our darker years back in the early part of the 2000s. So when the internet bubble burst, we were massively overbuilt. We had 27,000 employees. We had seats for 40,000 people because we were growing so rapidly. We went from 27,000 down to 12,000. We dumped 2 million square feet of real estate onto the market 5 successive years because we were just that over capacity. We had 7,000 people on the phones doing what today about 400 or 500 people do, because the clients now do the rest of it themselves on the website. It was a massive change in the company. It was a company that had grown enormously in a very short period of time, had never laid off a person. So our problems were back in 2003, 2004, as we took stock of what we really were going to be, what we really needed to do, and started eliminating some of the excesses and reevaluating what our value proposition was and how we were going to deliver it to the clients. So we had just come out of kind of a massive business cleanup and simplification as the financial crisis started to hit. The funny thing is, so I became CFO in May of 2007. I closed the last enterprise sale, so the sale of U.S. Trust in June of 2007. We went through a big recap of the company where we returned $3 billion to shareholders of excess capital as a result of the sale of U.S. Trust. Man, I wish I knew what was coming, because I'd have kept some of that capital. But we were afraid at the time that somebody was going to come make a run at the company for all that cash and use it to pay for it. So, and we were coming out of kind of a challenging time, and our valuation wasn't that good, so we had to get the capital out. So the first thing, literally, I went from selling an entity, doing a major recap, and then all of a sudden, that was done in July and August, and then we started seeing the first signs of bonds cracking in August, and the whole picture turned with a vengeance. We actually had a record year of earnings in 2008 as things started to deteriorate for everybody else, and we just surpassed our 2008 earnings last year. So it has been quite a cycle. But through it all, I'd say we've held on to the culture by being as transparent as possible with the team about the challenges we face, the decisions we're making, and why we're doing it. Even this year, our planning communications were pretty exhaustive about choices that we were making. So we are really sensitive to interest rate levels. These low interest rate levels are really killing us. As rates start to move up, if the Fed actually does continue on, our financial picture will improve pretty dramatically. So there's intense focus around the firm on how much of that did you bake into the plan, and what are you going to do with all of that? Because the fear is we're going to go out and hire a bunch of people, and then we're going to have to go through another round of layoffs. So we've told our investors, we've told our employees, no, what we did was we put more money into marketing, because marketing is very easy to ramp up and ramp down. We think that's going to drive some incremental growth that'll allow us to continue to build scale. We put a big chunk of money into technology development, because technology development, again, is something that's easier to scale up and scale down. You can push delivery dates, you can manage scope. A lot of that is delivered with contractors or offshore labor, so you're not firing your own employees, you just scale the temporary workforce. So, but we've talked about all of that openly. So, it's a process. If we hadn't built the underpinnings, it would have been a lot harder, but a lot of it was there. So they're through the crisis, there continued to be, I think, a fair degree of trust among the company as to how we were approaching the problems.
Thank you very much for coming to speak to us today. I sort of had a question on promotions. So you said that you got the one promotion by essentially being a better, nicer person than other people. But outside of that, what do you think are some qualities or characteristics that really lead to being able to rise up in a company?
Yeah, so clearly I also had a skill set that I think made people comfortable that I was going to be okay at doing it. It depends on the type of path you're pursuing, because there are so many finance people in the room. There will probably be some commonality for a lot of you. What tends to happen in financial services type jobs is you get an analyst type job, you start to develop some really deep expertise, you'll move up with some broader responsibilities, but probably not be managing people. Maybe you'll get to a place where you're running a smaller team, but the decision making is probably still more distributed, and it's really still sort of your success is predicated along the lines of that technical skill set. So building and demonstrating that technical proficiency early in your career is really important. That will get you to a certain level. If you don't start to build those softer skills, those other capabilities, you will stall out there. And so, and it's sort of, I hate to quote other people's books, but it's sort of the what got you here won't get you there kind of thing. Those technical skills will get you to a certain level. If you want to continue to move in an organization, you're going to have to start to build those other broader leadership type skills. You're going to have to become, you're going to have to learn how to actually lead people with a vision that is compelling. You're going to have to learn how to present that vision in a way that allows people to follow along with you, right? You're going to have to be able to learn to delegate and work through others. These are all things that are sort of hard pressed for that deep technical expertise person to, I'm going to let go and let someone else be that deep technical subject matter expert now, and I'm going to trust that they're going to make a decision that's as good or better than the one I would have made. That's a big leap of faith. These are all things that you know, you'll have to work your way into if you want to continue to move up an organization.
If there are no more questions, please join me in thanking our speaker tonight.
Well, thank you all for your attention.